Carbon markets. What are they and why do they matter? Well, they've been brought into particular focus this year because of the energy crisis, and they were discussed extensively at COP27. I'm going to talk to Hege Fjellheim, who is Refinitiv's head of carbon markets research, about some of the issues that were discussed at COP27, the rules that are being put into place, and how these are expected to evolve over the coming years. Hege, welcome and thanks for joining us. It's been a fairly incredible year for the energy markets, and with COP27 just having taken place, the carbon markets are once again front and centre. But before we get into the discussion of what went on at COP22 and the development of the carbon markets, could you please just give a recap of what the carbon markets are and what they really mean to people?
Yeah, great question, because it's actually it's quite confusing sometimes, and the terms are used a bit interchangeably. I would really distinguish between an international carbon market and national or regional carbon markets. So international carbon markets is really trading across borders, and it's trading in offsets. So it's credits to either reduce, avoid, remove carbon. While national carbon markets or emissions trading systems are really tools by governments or by the European Union, for instance, to meet national or regional climate goals. The voluntary carbon market is also something that has been a market that has been growing a lot over the past couple of years. It is an international market as well, but only that the demand for the carbon credits comes from the net zero claims or targets by corporates. It is confusing, but it is really two different type of markets.
And so I guess coming on from that is, why is it that carbon markets are so important to COP? Why were they such a sort of a topic for discussion at this year's event?
Yeah, well, I think carbon markets really go to the core of the Paris Agreement and of the international climate talks. Whether it's an international carbon market or if it's domestic and regional emission trading schemes, they are really tools to achieve something else. And this something else is ambition. They are tools to meet climate ambition, and that is what the COP is all about. It is about ambition, and it is about finance to reach those ambitions. The idea is really that with access to mitigation, to finance mitigation in other lower cost mitigation options, you will enable countries to speed up or step up their climate goals. So this really idea of the bottom-up approach of the Paris Agreement, that countries come to this gigantic global potluck with ever deeper national contributions, which is the key term for really the climate ambitions. With the Article 6 talks having quite a low profile, there has been a lot of attention on carbon markets, with Kerry coming to town last week, proposing a US proposed offset mechanism to finance coal phase out, and with private money. So it's called the Energy Transition Accelerator, ETA. Quite a lot of lack of details at the moment, but it will be interesting to see how this plays out. I think it's quite illustrating of the complexity of international carbon markets, because it seems to be a hybrid solution where private corporations, for the purpose of meeting their own voluntary carbon target, net zero carbon targets, provide finance to policies to phase out coal or to increase the uptake of renewables in the power sector in the global south. So it's kind of this hybrid, which is different from the voluntary carbon market, which is really project-based, because you need a jurisdictional host country or counterpart on the host country side, and it's also confined to the power sector only. And it's also really an open question whether this Energy Transition Accelerator would use the Article 6 infrastructure, or if it would need something else in addition. So a lot of open questions, but I think and there will be a lot of interface between the voluntary market, the Article 6 negotiations, and these kind of new initiatives that we saw was brought forward last week.
Obviously, COP is often sort of setting rules and guidelines. What are the rules and guidelines that is hoped to come out of this COP27 in terms of setting these carbon markets and creating this market going forward?
Yeah, well, I mean, of course, the rules need to be waterproof. If you transfer these so-called mitigation outcomes, it's most in the jargon again, between countries, you need to know that the accounting is right. And of course, during the Glasgow COP27 last year, the Article 6 negotiations was really crucial because it was the lacking piece of the Paris Agreement rulebook, and they were able to agree them in Glasgow last year. For this year, the Article 6 negotiations are continuing because you need to really operationalize the rules, but it has a much lower profile for the COP itself than it had last year, I would say. Nevertheless, they are important because in order to actually start using this transfer of credits between countries, then you need the rules in place, and these negotiations are difficult, and they're going on right now. I think there might be expectations that some of this will have to be postponed to COP28. But you never know with the COPs, right? That things seem a bit impossible at this stage, but then at the final leg, you might come to an agreement.
And something you sort of talked about difficulties there is that in this sort of world where we've got this ongoing energy crisis, which feels like it'll roll on into 2023 and 2024. Are these rules that are being formulated now, are they going to be enforceable, or how will they be enforced in this world of an ongoing energy crisis?
Yeah, I mean, the COP is, of course, during the COP, the focus is, of course, on these rules for international carbon trading, the Article 6 rules. And it is of crucial importance to get these rules in place, but these are really an infrastructure for the future, as I mentioned before, to enable countries to deepen their climate ambition. And it's not imminent to have them in place tomorrow, but of course there is impatience to have the rules in place, both by countries who want to start using this mechanism, but also for voluntary carbon market participants who want clarity on the framework. The domestic or national or regional emission trading systems around the world are more or less immune to what is happening at the COP itself when it comes to these rules, because few of them are allowing substantial import of offsets into their systems. So they are kind of more closed systems that will enable green transition in those jurisdictions. And as you see here, the prices for those markets are varying with local conditions, local supply demand, climate targets for the different jurisdictions, weather, energy prices in that system. But if you look at the price chart to the right, you see that it's coming from 1st of January 2021, and you see basically that prices are holding up into the energy crisis year of 2022. So we think that the trend that you see on the chart to the left here, which is taken from our annual carbon market year in review report. So this shows the trend of market values for the different emissions trading systems up until 2021. But we think this trend is gonna continue because it's as long as climate targets or the climate ambition is upheld, you will have prices that are reflecting that ambition, because this is the main fundamental in any carbon market is the climate ambition, because it determines the supply side with the number of credits in the market shrinking year by year to abide to the cap and the climate ambition in the system. We forecast for Europe, which is closest to this energy crisis and has really felt it, we forecast prices going from now around 70 euros to 130 euros in 2030, given that the climate ambition is set in stone, set in the European climate law, and the policymakers are not deviating from that, and there's no sign of that. I think for the short term, you kind of have to accept that coal is king. There will be higher emissions, but in the long term, energy security of supply and climate ambition is really the same agenda.
You mentioned there, talking about this on this sort of global scale. How does it? I mean, we've got this sort of, some markets are much more developed than others. How, sort of over the longer term, how do you ensure that this is enforced globally and it's a level playing field and there's not certain regions or areas using sort of backdoor to gain advantages?
Well, I think the logic of the Paris Agreement is that countries are putting forward their own ambitions based on their own circumstances, and this bottom-up approach is just very different from the Kyoto Protocol regime that was prevailing previously, and with that nature, countries will also choose their own ways of achieving their own goals. So some will, these domestic emissions trading systems that we have operational today are very different in scope and in ambition and in coverage, and I think this is the way forward. Of course, you also have this kind of elephant in the room, maybe in the climate talks, which is the EU CBAM, or carbon border adjustment mechanism, which will secure that European industry is not hit by other countries not having a similar stringent climate policy. So it's also, in a way, imposing a European climate ambition or carbon prices to other countries and nudging them to step up the climate game in a way.
We've been talking obviously about carbon markets, we've been talking about the energy crisis, etc. And obviously these things are playing at the same time. But sort of bringing it all together, as we look out over the next sort of 2 or 3 years, what is that key role that the carbon markets are going to play within this ongoing energy crisis?
It is the same agenda, climate agenda and the energy security of supply agenda. You need to develop greener and more secure energy supply for Europe and for other countries, and you need to scale out or phase down coal, scale out fossil fuels and scale up renewables. And carbon pricing can play an important role in incentivizing that shift. And also what has been quite clear, especially in Europe when addressing the energy crisis, is that also the revenue side of an emissions trading system, because the allowances are auctioned and the revenue goes to the country that is auctioning them, or and can also be channeled to different funds, as is the case in Europe. And this big source of revenues when prices are increasing is also something that can be used to alleviate some of the impacts of the energy crisis, and this has been the case for Europe, where the discussions is ongoing on the Repower EU, and where some revenues from the EU ETS will be used to fund the acceleration of renewables in Europe.
Great. So thank you very much. I mean, it's a lot of complexity out there and ongoing developments, but certainly it's a topic which I think we'll hopefully be revisiting over the coming months and quarters from here.
Thank you.
So as you can see, this is still very much a developing market. Now, some of the issues have been put on hold because of the energy crisis and the war in Ukraine, but going forward, the carbon markets will be central to this push towards carbon neutrality. And these rules are going to have to be implemented on a global basis. There is still a lot of work to be done, as you've heard, but this is still going to be a key part of the whole energy transition process.